Well, let's talk about Outlook 2021. And as we start this particular new year, Mahesh Nandurkar of Jefferies, who of course is a well-known strategist across Indian global markets, has written a note on the Indian 2020 outlook. Now, his Nifty target is 15,800. That's a substantial target, and by far one of the most bullish target among all the review reports or the outlook reports that you have seen. It provides almost a 14 to 14.5% in sort of an upside from the current level. Now, what they are saying is it's a cyclical recovery that you're seeing in the market. It's a housing-led recovery that you're seeing in the markets, and overall the GDP growth is on the higher side. They expect GDP growth is coming off a lower base, but they expect it to be particularly strong. That will lead to very strong earnings growth in FY22, and that is something which they want to capture on. They believe that currently markets on a price to equity earnings ratio, which they would normally look at on a forward basis, is looking expensive. But at the same time, they also have one of the ratios which they like is when the interest rates, when you compare it to sort of earnings growth, when you compare it to bond yield versus what's happening in the market, that ratio is in line with averages, and that's why they don't believe markets are particularly expensive. However, they are overweight as far as financial names are concerned. They are overweight as far as cyclical recovery is concerned. On the other hand, IT is a pack as they particularly don't like. They also are, they have a mix of cyclical and non-cyclical as far as their overall outlook report is concerned. Now, when we talk about themes, there are 2 or 3 themes that they are talking about. One, of course, is a favorable GDP growth. They believe that macros are favorable, interest rates are lower, liquidity will be higher. That is something which they believe. But on the other hand, they are also saying, cautioning people as far as inflation is concerned. So they believe that inflation is something which people should take a note of, and very sharp rise in inflation and a change in RBI stance could be one of the key risks to liquidity in the market. They have about 8-10 names which they particularly like, which they particularly want to focus on. So when we talk about these names or what they have, so the likes of ICICI Bank make it into the top 10 list. HDFC Limited is a part of their top 10 list. In terms of PSU, they particularly like Concor, or they want to play it via the divestment theme. Godrej Properties is a part of that. ACC is a part of that, and that's how they have had a balance of their entire approach as far as stock picking is concerned. But overweight on cyclical, overweight on financials, that is probably the key theme that they are advising their clients to play on.